Good afternoon. From the For the See Me, this is Chris Robinson with your Traders exclusive comment for today, Thursday, May 9th. Well, there's so much to talk about, right? The trade war is either going to be increased tonight at midnight or decreased with some sort of a deal. That's massively impacting all the markets, particularly corn, wheat, and soybeans, however. Soybeans moved to a new low this morning. You had the spot month, May. Granted, it's at an expiration, but it fell below $8. That's a big psychological level. You have new crop soybeans flirting with around $8.30, $8.20. Again, wasn't that long ago, literally about 4 weeks ago, we were above $9. So we've seen this repricing of risk in the ag markets due to two things. Huge carry out, big supplies, not only here in the U.S., worldwide, corn, wheat, and beans. Really not so much for corn here in the U.S., but at the end of the day, when you throw in the fact that we've had a big dial back of exports across the board in the past 6 to 8 weeks, you're looking at that situation there. So you've got fundamental big supplies, you've got the uncertainty and the concern about what's going to happen with our Chinese markets, and it's been reflected in the ag prices. And we've really had a very difficult first few 5 months here of 2019. Any of the grains, you go back and look at corn, wheat, or beans, they were all higher and more stable at the beginning of the year. That's all fallen by the wayside. So that's the dark side. What's the bright side? The bright side is we could be getting close to a trade deal. It may or may not be happening. We'll know more tomorrow. Number two, we also are getting a USDA report tomorrow. So that'll be a fresh data dump from the government, and we'll get new supply and demand numbers. That could impact the trade a little bit. And if you look at the way the managed money is, the whole world knows the managed money short has a very big short bet. In other words, betting on prices going lower for corn, wheat, and beans. If we were to get a change in tenure, they would have to buy those back. So in the past 2 years, we've seen that time and time again where the managed money was wrong and then had to get out. They were either long and then were wrong, or they were short and were incorrect. And that really fueled a lot of the moves in the last couple years in the grains. This is the first time in really since about 2016, in my memory, where they've got it on right. They're short and they're making money and they're adding to that position. So again, they're not really being nefarious. They don't have it out for the American farmer. What they're doing is riding that trend. And at any point, if they get an indication, well, they need to cover that to lock in those profits, we could get a bounce. Now, when that's going to happen, if that's going to happen, it's anybody's guess. But that's the setup for tomorrow, heading into May 10th, the USDA report, and also we'll find out what, if anything, President Trump's able to do regarding the trade issues with China. If you're looking for help with your trading, hedging, speculating, give me a call. Chris Robinson, the Cal Guy Group, part of TJM Investments. Thank you.